Hi students, in the last class we discussed on the under subscription and the over subscription of the shares as well as the problems on that. So now we will see in this session the forfeited of shares and the reissue of shares. Okay, so one of the concepts of that unit only. Okay, so it's very important. On this it will come for the 10 marks the problem it is shows. Okay, and so it's very easy. Okay, so what is the forfeited of the shares or what is the forfeiture of the shares? Okay, so now see what is the forfeited of the shares. It means cancellation of the rights of the shareholder on the shares held by him for non-payment of allotment money or call money or both on such shares. Okay, so it means what? Suppose the shareholders were taken one shares from the company, but he is unable to pay the final call or the allotment money or the call money, that may be the first call or that may be final call. Okay, if it is unable to pay, then the company will cancellation of the rights. It means whatever they are having the rights, they will cancel by the company. Okay, so this is nothing but the forfeiture of the shares if it is unable to pay. So but before cancellation of the shareholders rights of the shareholders, the company should give the notice to the shareholders to pay the arrears of the shares. Okay, to take the rights of the shareholders. If it is not paid the price or the call money or the allotment money for the for that shares, then the company will cancel the rights of the shareholders. Okay, so now for the forfeiture of shares at par value. Okay, so related the entry, how to pass the entry related the forfeiture of the shares at par, forfeited of the shares at premium, forfeiture of the shares at discount. At the time the separate entries we have to pass. Okay, so now see forfeiture of the shares issued at par at that time. So how to pass the journal entry? Share capital account debit. Okay, so it is nothing but the called up. Okay, share capital account debit to forfeited shares account paid up to share allotment account or to share call account unpaid. Okay, so it means what? Share capital. Okay, suppose at the par value, whatever the par value it is, just we have to take what's the share, each share price is rupees 100. Okay, so or the rupees 10, like this it is the called up. Okay, so rupees to forfeited shares. The forfeited shares means whatever they paid. Okay, out of the 10, if it is he paid the 8 rupees, then this is the forfeited of the shares. Okay, so share allotment account or the share call account unpaid. Okay, share call account means what's unpaid means what's if it is shares rupees, each share is rupees 10, out of this 8 rupees is paid but final call is unpaid, it rupees 2. Okay, so these 2 rupees we have to take here. Okay, so like this we have to pass the journal entries. Okay, so next forfeiture of shares at premium, share capital called up amount debit, securities premium account premium amount remaining unpaid debit to forfeited shares account amount already received that amount, so credit to share allotment account credit or to share capital account amount remaining unpaid, which is unpaid, so this is also the credit. Okay, so like this we have to pass the journal entries. Okay, so next forfeiture of shares at discount. At that time how to pass the journal entries? Share capital account debit, discount on issue of shares account debit to forfeited shares account credit to share allotment account credit to share call account credit. Okay, so like this you have to pass the journal entries. Okay, so I hope all of you I hope we will understand what do you mean by forfeiture of the shares or forfeited of the shares. Forfeited of the shares means what? If the shareholders unable to pay the allotment money or the call money, then the company will cancel the rights of the shareholders. Is nothing but the forfeited of the shares. Okay, so for that purpose at the par values there is a different transaction or the different way we have to pass the journal entries at the time of the premium, at the time of the discount. Okay, so now see one more concept is there in this. So reissue of forfeited shares. Okay, so whatever the forfeited the shares, suppose the 10,000 shares are there, so out of the 10,000 2,000 shares are the cancelled. Okay, so reissue means whatever these 2,000 shares cancelled, again they are going to reissue. Okay, again they are going to reissue with the new price. Okay, at the if suppose the par value is rupees 10, then they will give that the discount rate. Okay, so like this, in the way of they are the issuing. Okay, so it means what, the forfeited shares can be reissued by the company, and they can be reissued at par, at premium, or at a discount, but normal they are issuing at a fully paid as well as the at the rate of the discount, they are the issuing like this. Okay, so for the purpose of reissued at discount, at that time what's the transaction, what's the entry you have to pass, bank account debit, forfeited share account debit to share capital account credit. Okay, like this you have to pass. And suppose if the forfeited shares are reissued at par value, then what's the entry, a bank account debit to share capital account credit. Okay, so if the forfeited shares are reissued at premium, then bank account debit to share capital account credit to securities premium account credit. Okay, so like this we have to pass the journal entries. Okay, so I will provide the notes. Okay, so just try to understand. Okay, so now on this forfeited of the shares and the reissue of shares, we will see one problem on this. So this is the problem. So see here, Moonlight Company Limited has a nominal capital of rupees 4 lakh in equity shares of rupees 10 each. Of these, 30,000 shares were issued to the public. The amount was payable as follows. Okay, so they are issuing how many shares? The Moonlight Company is there, and the each share price is rupees 10, and out of this 4 lakh capital, it means what's, out of this 40,000 capital, 40,000 shares, the 30,000 shares they are going to issue. Okay, so now see, the each share price is rupees 10, and how they are going to collect. So this rupees 3 by the application, rupees 3 by the allotment, rupees 3 first call, and by the rupees 2 final call. Okay, so again one more adjustment, what's the statement is given. Okay, or the note is given. What is that? All the shares were subscribed and the money duly received except the final call on 2000 shares. Okay, so in the earlier problems we saw related this. Okay, so how to pass the journal entries while final call, because the except the final call 2000 shares they received rupees 2. Okay, so you know that. Okay, so the directors decided to forfeit these shares and reissued them at rupees 11 per share, fully paid up. Okay, so again see here, whatever the shareholders unable to pay to final call rupees 2, so out of these 30,000 shares, 2,000 shares rights are cancelled by the company, and company decided whatever the cancelled shares of these 2,000, again they are going to issue to the public at rupees 7. Okay, but fully paid, not the discount. Okay, so at the fully paid, they have to pay the 7 rupees at a time. Okay, so this for this 2,000 shares. Okay, pass the necessary journal entries to record the above transactions in the books of companies. Okay, so in the very first class, whatever the format is given, pass the journal entries related to the applications, related to the allotment, related to the first call, as it is we have to pass, as well as final call. And so in this also we have to pass the as it is. Okay, so now see the first transactions on the applications. Okay, so see here, journal entries in the books of Moonlight Company Limited. So this is the format. So bank account debit to equity share application account credit rupees 90,000. Okay, being application money received on 30,000. Okay, shares at rupees 3 per shares. Okay, so it means what? So 3 rupees into 30,000 shares. Okay, so now this is going to transfer to the capital account. Okay, so now how to the journal entries, equity share application account debit to equity share capital account credit rupees 90,000. Okay, being application money transferred to capital account. Okay, so like this you have to pass the journal entries. Next on the allotment. Okay, so on allotment as it is you have to pass equity share allotment account debit rupees 30,000 into 2, it's a 60,000, to equity share capital account credits 30,000 into 2, it's a 60,000, being allotment money due 30,000 shares. Okay, so now this 60,000 we are going to collect. Okay, or the transfer. Okay, so now see, bank account debit to equity share allotment account credit 60,000. Okay, being allotment money received. Okay, next for the first call, so on 3 rupees on the first call, what's the transactions as it is you have to pass, bank account, sorry, equity capital of first call account debit to equity share capital account credit rupees 90,000, being first call money due on 30,000 shares at rupees 3 per share. Okay, so now this first call money they are going to receive. Just here, bank account debit 30,000 into 3, it's a 90,000, to equity share first call account credit rupees 90,000, being first call money received on 30,000 shares at rupees 3 per share. Okay, so now see the related the final call. So rupees 2 on final call. Okay, so out of this 2 final call, out of this 30,000 shares, 2,000 shares are not received. Okay, 2,000 shares at the rupees 2, they are not received. It means what, while transferring or while receiving, at that time we have to change. Okay, so first entry as it is we have to pass. Okay, so see here, equity final call account debit rupees 60,000 to equity share capital account credit rupees 60,000. Okay, being final call money due on 30,000 shares at rupees 2 per shares. Okay, so while receiving at that time, out of this 30,000 shares, 2,000 shares are cancelled, so only 20,000 we will receive the money. Okay, so now see, bank account debit rupees 20, how many shares, 28 shares, 28,000 shares into 2. Okay, so rupees 56,000 to equity share final call account credit rupees 56,000. Okay, so now like this we have to pass the journal entries. Up to this clear. Okay, so now what's the remaining journal entries now? So this related to the what? It's related to what? A forfeited of the shares. Okay, so now see for how to it's forfeited. So what's the mentioned in the problem? Just see here. So all the shares were subscribed and the money duly received except the final call on 2,000 shares. Okay, so they are not paid the final call. Okay, those 2,000 shares are taken, so for this 2,000 shares the final call is not paid. Okay, so that's why the director has decided to forfeit these shares. Okay, it means what's, cancel the share, cancel the rights of the shareholders. Okay, and again they are going to reissue. Okay, first of all we will see the journal entries for the forfeited of the shares. Okay, so see here, so equity share capital account debit. Okay, equity share capital account debit, how many shares forfeited? 2,000 shares at the rate 10 rupees. Okay, so face value is what, rupees 10. Okay, so at price rupees 10, 20,000. Okay, two forfeited shares. It means what, out of that 10 rupees, how many they paid? 8 rupees paid. Okay, so 2,000 into 8, it's a 16,000 credit. Okay, so to equity share final call rupees, it is a unpaid. Okay, what, it is a unpaid, 2 rupees it's a unpaid. Okay, 2,000 into 2, it's a 4,000. Okay, so being forfeiture of 2,000 shares for the non-payment of final call. Okay, so this is 2 rupees is nothing but the non-payment for this 2,000 shares. Okay, so like this you have to pass the journal entries for this forfeited of the shares. Okay, so now this bank, how they are going to receive? Okay, so or this is the reissue of the shares. Okay, so this transaction for the reissue of 2,000 forfeited shares. Okay, so this is the reissue transactions. Okay, so now see, bank account debit. Okay, so how many shares they are reissuing? 2,000 they are reissuing. Okay, at the price of rupees 7. Okay, so they directly here mention, what's they mention, the director decided to forfeited these 2,000 shares and again they are going to reissue at the rate rupees 7. Okay, fully paid. Okay, at a time they have to pay rupees 7. Okay, so now see, so bank account debit rupees 28,000, sorry, bank account debit, how many shares? 2,000 shares at the rate rupees 7, it's 14,000. Forfeited shares rupees 3,000, 2,000 into 2. Okay, so 2,000 shares into 3, so 3 rupees, it means what, it is the loss. Okay, so earlier the share price is rupees 10. Okay, so again they are going to issue at rupees 3, it means 3 rupees is the loss. Okay, so forfeited shares 2,000 into 3, it's a 6,000. To equity share capital account credit rupees 20,000. Okay, 14,000 plus 6,000, it's a 20,000. Okay, to equity share capital account credit rupees 20,000. Okay, so now see, so for this is the transfer to the capital reserve. Okay, so for this transaction is for the transfer to the capital reserve. Okay, so now see, forfeited share account debit. Okay, forfeited share account debits. Okay, so how it came the 10,000, so this how it came this 10,000, so this 16,000, so these forfeited shares. Okay, so these forfeited shares credit 16,000 minus, so these forfeited shares 3 at the price rupees 3, it's a 6,000. Okay, 16,000 minus 6,000, remaining value is 10,000. Okay, so this is the forfeited share account debit rupees 10,000 to capital reserve account credit rupees 10,000. Okay, so being the balance in forfeited shares account 16,000 minus 6,000 transfer to capital reserve account. Okay, so like this you have passed the journal entries. Okay, so just try to understand this forfeited transactions as well as the reissue of the shares. Okay, just try to understand. If you have any query with this, then you can contact me. Okay, so I hope you will be the understand and just try to understand the meaning of the forfeiture of the shares. Okay, forfeiture of the shares means what is the cancellation of rights of the shareholders to on non-payment of the allotment money as well as the call money. Okay, so I hope you will be understand. So thank you.